Now, here are three things you need to know right now on this Friday morning. More data on the consumer front today as we got a look at June retail sales. They came in better than expected at an increase of 1% for the month of June. The month of May was also revised to negative 0.1% from negative 0.3%. Well, Julie, looking at these numbers, don't look recessionary to me.
Yeah, maybe not. But Brian Cheung can tell us more about what they showed with these retail sales numbers. So we saw, a little bit better than an expected number, but especially when you strip out autos and gas, which was sort of notable to me.
Yeah, well, I mean, the challenge with this report, and I think Sammer actually helped frame this pretty well this morning on Twitter, but it was going to be bad either way, because if the report came in lower than estimated, well, the expectation is that actually shows signs of recession already happening with cratering demand, right? That means we're in a recession. But if it came in hotter than expected, then the inflationary story is very much still valid. Fed's going to have to hike more aggressively. That means we end up in a recession. So either of those scenarios is not good, obviously, but again, if you just look at the numbers themselves, what it tells us is that the American consumer is still out there very much paying those prices that are rising. You have to consider that the retail sales number, you should adjust that for inflation. Now, at the same time, it was about above estimates. When you consider 1% increase in the month of June compared to 0.9%, which was what the street expected, either way you cut or slice it, this is something that the Fed's probably going to have to react to. It could add some steam to a 100 basis point, 1% increase from the Fed in about 2 weeks.
You are a true 12-tool player there, Brian Cheung, talking some retail sales and some Fed. What stood out to me here, non-store retail up 1.9% month over month. That was very good. Furniture up, electronics up, food and beverage up, pretty good. So consumer, they were hanging in there. But what was down, what if I needed a red flag in this report, it was some of the discretionary categories like clothing, health and personal care. So it's not like the consumer was out in June spending willy-nilly. They were making tough choices of what to buy and what not to buy in this inflationary backdrop. Well,
and it's hard to back out. When we have the individual retailers, usually they will tell us what the volume increase was versus what the price increase was. When we have these macro numbers, we don't necessarily know of those increases, how much of it was because prices were going up and how much of it was because people were actually buying more stuff. So we'll have to sort of parse that in the individual companies.
What Waller said yesterday, he was looking for some hot reads.
Yeah. And this is hot. Yes. But it's not just retail sales. So he made a speech yesterday where he said, as of the two readings of inflation that we got the last 2 days, right? CPI on Wednesday, the PPI yesterday, he still felt like a 0.75% increase would be okay at the end of this month, but contingent on what retail sales looks like, what housing data looks like, and also what inflation expectations figures look like, which means that he's probably going to be paying attention a lot to the consumer sentiment numbers that we're going to get later on today around 10 a.m.
Julie fave.
Right?
Yes.
Very much. Well, I mean, that was the big pivot, actually,
yes,
that led to the June increase being a lot higher than expected. So we're going to have to see the string of other data. It's possible that they could come in softer than expected, which might further increase the case for a 0.75% increase in the Fed's next meeting. But look, I've been refreshing very frequently the Fed funds futures markets. And in the response to the numbers that we got this morning from retail sales, because of what Chris Waller said yesterday, you saw more steam go into odds of a 1 percentage point increase. Now about 52% is what the markets are pricing in this probability.